Hi guys. Today we will analyze Citizens Financial Group stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock has been an average performer in the overall market. The long-term trend is still unclear, but the short-term trend is neutral. It is advised to wait a little bit longer to see how this turns out. Strong support levels are around $35 and $29. Next strong support level is around $25. Strong resistance levels are around $40 and $42. Next strong resistance levels are around $45 and $51. In the last month the stock has been trading between $35.30 and $39.80 range. It is currently trading in the middle of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 3.5 million. This is a good sign as it is always nice to have a liquid stock. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Valuing financial institutions. Understanding why financial institutions are different from traditional real sector companies is key. Banks function differently than traditional cash flow-driven companies. Traditional companies create products to make money. The products of banks are money. Banks are highly levered and they do not reinvest debt in the business and instead use it to create more money. They make money via interest. So, they view debt and interest differently. That's why, our favorite discounted cash flow valuation method doesn't work for banks and insurance companies. Intrinsic values calculations. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. The excess return model. This approach is used for financial institutions where free cash flow is difficult to estimate. Then, we will use valuation based on earnings per share, EPS, 5-year average PE ratio and expected growth rate. First model. Excess return model valuation. This spreadsheet contains some financial data that we will use for the stock valuation. In this valuation I will use margin of safety. 30%. Once we actually figure out what we think this stock is worth, we are only going to buy the stock if it gets 30% of what we think it's worth. It gives us a big margin of safety if our predictions are wrong. In other words, when something is worth $1, I want to pay only 70 cents for it. I want to be conservative with financial institutions. So, my margin of safety is 30%. According to our formula, the fair value of the stock is $50.37. When we apply the margin of safety to that value, the fair value of the stock would be $35.26. That's the price that I may want to pay for this stock. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for Citizens is 3.95. Minimum rate of return. I will use 10%. Because when we invest in individual companies, we are looking for a higher return than the S&P 500. For Citizens, analysts forecast growth rate around 4% per year in next 5 years, and future PE around 9. I will use 3 different scenarios for Citizens company: bad, average, and good. First scenario. Citizens will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 3%. Future PE would be low, 8. In this case, the fair value of the stock today would be $17. Second scenario. Citizens will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 4%. Future PE would be average, 9. In this case, the fair value of the stock today would be $21. Third scenario. Citizens will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 5%. Future PE would be high, 11. In this case, the fair value of the stock today would be $29. As you can see, today the stock is overvalued, $37, even if we expect the company's high performance in future. Both the profitability and financial health of the company have multiple concerns. Also, the stock is expected to show a small growth in revenue in the next 5 years, 4 to 6% yearly. Based on that, the stock looks overpriced at the moment. I may consider buying the stock for the dividend, 4.55% yearly, when the stock drops to $30. Company's strengths. Citizens Financial Group operates as the bank holding company for Citizens Bank, national association that provides retail and commercial banking products and services to individuals, small businesses, middle-market companies, corporations and institutions in the U.S. Its sustainable banking franchise provides good geographic diversity, sizable base of core deposit funding, and healthy liquidity. It also benefits from a balanced mix between commercial and consumer segments, and an experienced management team. Excellent expense management has led to healthy profit margins. Strong balance sheet and cash flow enable an above-average dividend payment, 4.55%. Citizens acquires Paladin Advisors, it expands its wealth management business. The acquisition brings additional investment capabilities to the Clarfeld Citizens Private Wealth Team. Citizens is also going to acquire higher education planning platform, College Raptor. The addition of the platform will expand Citizens' personalized advice and insight capabilities, to help students plan for college. In April 2022, Citizens completed the acquisition of Investors Bancorp. With the addition of Investors and HSBC's East Coast branches, Citizens has become a top 10 bank in deposits in the New York City metro area. Risks. The company is subject to a number of risks, including changes in interest rates, credit quality, loan demand, and capital markets liquidity. It also faces risks from financial services regulation. Other risks include rapid asset quality deterioration, due to a sustained economic downturn, and failure to grow fee-based revenue and execute cost-saving initiatives. The company is also exposed to higher risk lending, such as commercial real estate, auto, education and energy. The company's return on equity of 7.6% is worse than the rest of the industry. Its profit margin of 26% is worse than the rest of the industry. The industry average profit margin is 30%. Based on estimates for the next 5 years, the company will show a small growth in revenue. The revenue will grow by 4 to 6% on average per year. The earnings per share is expected to grow by 6% on average over the next 5 years. Be aware of dilution of shares. Citizens shareholders have been diluted in the past year, with total shares outstanding growing by 15.4%. It's not good. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.